Economic Survey 1920 have come with a separate box. Okay, so when in the Economic Survey, if it is something coming in the box, means it is very important for your prelims. Okay, so the heading is, what are the major policy changes related to banking sector? There have been 4 or 5 important policy changes announced in the year 1920 related to banking sector. So we will see that what are the major policy changes related with banking sector. The first one is permitting one-time restructuring of existing loans to MSME. So this is basically a one-time restructuring of loans to MSME only. Okay, only for MSME. One-time restructuring of loans to MSME, which is standard without a downgrade in the asset classification. Okay, so even though MSMEs will be given a chance to restructure their loan, but its asset classification will not be downgraded. Okay, so this is one of the important announcement regarding MSME sector, regarding lending to MSME sector. So regarding this one-time restructuring, okay, so existing loans, this restructuring is only for MSME, existing loans of MSME that were in default. So any MSME loan which have been in default with asset even though they are in default, their asset classification as standard. So as on January 2019, as on January 1st, 2019, an existing loan of MSME which have been classified as standard but has defaulted, they will be given, bank can restructure their loan without downgrading their asset classification. Okay, so without downgrading the asset, so if it is a standard asset, it will remain as a standard asset. Okay, so only one time restructuring is allowed. So basically it is to promote the MSME sector. This one time restructuring of MSME loans without downgrading the asset classification is something to boost the credit to MSME sector. So this scheme, this one-time restructuring is available to MSMEs qualifying certain objective criteria. So to qualify this one-time restructuring, MSMEs should fulfill certain criteria. They are, this MSME loan, it is a cap of rupees 25 crore. Okay, so the total loan to the MSME should not be more than 25 crore. The total exposure to banks or NBFCs should not be more than 25 crore as on 1st January 2019. So this is a limit. Okay, so be clear, MSME loans up to 25 crore only will be qualifying under it. And this one-time restructuring have to be implemented before 31st March 2020. Okay, so those banks which is providing this one-time restructuring of loans to MSME, they need to have an additional provisioning of 5%. Along with the existing provisioning, an additional provisioning of 5% have to be maintained in the accounts of the bank when they provide one-time restructuring. Okay, so these conditions are there. This is actually a condition for the bank. If a bank is giving a one-time restructuring to MSME loan which is standard and which is below 25 crore, they have to make an additional provisioning of 5%. So this is one important policy changes regarding the banking sector, one-time restructuring for MSME loans. Second is, for the first time, bank loans were available to infrastructure investment trust. Okay, so it was decided, RBI decided that banks can lend to infrastructure investment trust. See, infrastructure investment trust is a new form of fundraising, okay, to boost the infrastructure. Okay, so normally this infrastructure investment trust basically raise money from the stock exchange, okay. So they will sell the units in the stock exchange, but RBI have decided that this infrastructure investment trust need to be supported. So bank lending is now available to infrastructure investment trust. Because of this current affair, they can ask conceptual question regarding infrastructure investment trust. I have already covered it, please revise it, okay. So it was decided to permit banks to lend to infrastructure investment trust subject to certain safeguards. So there have been certain safeguards, okay. By following a certain safeguard only bank lending is allowed, which include a board approved policy on exposure to infrastructure InvITs, okay. The board have to approve. There should be an exposure, how much loan or how much exposure it can be provided to InvIT. Then assessment of all critical parameters, including the sufficiency of cash flow at InvIT level, okay. How much cash flow and InvIT, infrastructure investment is required, trust is required. Then the overall leverage of the infrastructure investment trust, as well as and the underlying special purpose vehicle to be within the leverage permitted under the board approved policy. So basically it is looking into the financial capacity of the infrastructure investment trust, their requirement, cash flow requirement, okay, as well as the board also have to approve it. Then monitoring of the performance of the underlying SPV on an ongoing basis, and lending should be given only to those infrastructure investment trust where none of the underlying SPVs are facing financial difficulty, okay. So basically this infrastructure investment trust, after raising a fund, they will create a special purpose vehicle for developing infrastructure, okay. So none of the special purpose vehicle created under the InvIT should not be facing any financial difficulty. If they are facing any financial difficulty, then bank loan or bank lending will not be available, okay. So infrastructure investment trust which fulfills these criteria only will get bank loan, okay. So this is a major policy announcement made by RBI in 2019. Now bank lending is available to infrastructure investment trust. Then the third major policy changes is regarding the resolution of stressed asset. We know that stressed asset are those assets which are in stress, okay, which can become a potential bad loan. So regarding resolution of stressed asset, there have been some changes, okay. Reserve Bank have released a new prudential framework for resolution of stressed asset, okay. The fundamental principles underlying this resolution or under this resolution of stressed asset we'll see that what are the new fundamental principles on which the new prudential framework for resolution of stressed asset have been made by RBI. First one is early recognition and reporting of default in respect of large borrowers by banks, financial institution and NBFCs, okay. Banks, financial institution and NBFC which has given huge loan to large borrowers should have a mechanism for early recognition and reporting of default, okay. So that before something get delayed, so once a default is detected at the earliest, resolution also can be done at the earliest, okay, so that the bank can reduce their losses. So early recognition and reporting of default by large borrowers is one of that criteria. Second is there will be complete discretion. The lenders like banks or financial institution or NBFC will have complete discretion with regard to design and implementation of resolution plans, okay. Resolution plans, especially under the insolvency bankruptcy code, okay, they will have regarding the design and the implementation of the resolution plan, lenders will have complete discretion subject to the specified timeline and independent credit evaluation, okay. So these two are the only thing is that, okay, insolvency and bankruptcy code is set a time limit to go for the resolution plan, okay. Subject to the resolution time period and the independent credit evaluation, the lenders will have the discretion regarding the resolution plan. This is another thing fundamental principle which been stressed under the new framework. Third is, there will be a harmonized framework, a common framework for resolution of stressed asset in supersession of all earlier. See, we had before the Insolvency and Bankruptcy Code, we had many schemes like S4A, SDR, Strategic Debt Restructuring, 5/25, etc. All these earlier schemes have been superseded by the current resolution plan, which is only one and only Insolvency and Bankruptcy Code. And then there will be a disincentive system, a system of disincentive in the form of additional provisioning. Okay, provisioning is nothing but whenever a bank is having a bad loan, some of its capital have to be kept aside to deal with this bad loan. Okay, that is what is called as provisioning. So this provisioning makes the money available for lending lower for the bank. Okay, so a disincentive system in the form of additional provisioning for delay in the implementation of resolution plan. If there is any delay in the implementation of resolution plan, then the bank should have an additional provisioning, or so in order to make sure that the resolution plan or insolvency proceedings are taken up at the right time and there is no delay, a disincentive system in the form of additional provisioning have been added in the new prudential framework for resolution of stressed asset. Then withdrawal of asset classification dispensation on restructuring. Okay, when there is restructuring going on, this asset classification will be withdrawn. Future upgrades will be contingent upon a meaningful demonstration of a satisfactory performance for a reasonable period. Okay, once a restructuring is going on, okay, the current asset classification will be withdrawn, and what will be the future classification, asset classification will be based on the meaningful demonstration on a satisfactory performance for a particular time period. Okay, so the asset classification of the loan after restructuring will be based on a satisfactory performance of that particular borrower for a certain period. Next one, for this purpose of restructuring, the definition of financial difficulty. See, the financial difficulty will be one of the reasons to go for restructuring. So the definition of financial difficulty will be aligned with the guidelines issued by the Basel Committee on Banking Supervision. Okay, Basel Committee on Banking Supervision have come up with certain guidelines related with financial difficulty. So that financial difficulty definition will be used when the bank go for restructuring based on this guiding principle of financial difficulty. Okay, and finally, signing of intercreditor agreement. Okay, as the term suggests, okay, intercreditor agreement is the credit agreement between all the creditors, all the lenders to a particular borrower. Okay, so the signing of intercreditor agreement by all lenders to be mandatory. Intercreditor agreement is also very important current affair. Already last year UPSC asked a question for your prelims. Okay, so signing of intercreditor agreement by all lenders is to be made mandatory, which will provide for a major decision making criteria. Okay, so there have been in the intercreditor agreement, there is a criteria among the lenders in relation to resolution plan and decision making. So the intercreditor agreement will ensure there will be no differences between the different creditors or lenders to a particular borrower lending, so that it will help in early resolution of any bad loan. Okay, so these are the major initiatives taken up, or these are the major founding principles on which the new framework on resolution of stressed assets have been released by RBI in the year 2019. Then another change RBI have done is that RBI have introduced an external benchmark based lending. We already discussed that RBI was very much concerned regarding the failure of monetary transmission, and the earlier this benchmark lending, MCLR, marginal cost based lending rate, have been a failure. It could not able to bring in a better monetary transmission. So in 2019, RBI decided to go for external benchmark based lending. Earlier, all the benchmark based lending was internal. The bank themselves can design their benchmark based lending, but now it has become external. Based on certain external factors, the bank will decide their benchmark lending rate. Okay. So, as the monetary transmission under the current MCLR framework was not satisfactory, RBI have issued a new guideline which says that it is mandatory for banks with effective from 1st October 2019 to link all new, from 1st October 2019 onwards, all new floating rate personal or retail loans, all new floating personal or retail loans and floating rate loans to MSMEs should be linked to an external benchmark. Okay. So all new floating retail loans as well as personal loans and floating rate loans to MSME from 1st October 2019 onwards should be linked to an external benchmark. This benchmark, RBI has given a choice for the bank to decide which they can choose for their benchmark lending. The external benchmarks are, the banks are free to choose one of the several benchmarks. One is repo rate. They can take repo rate as their external benchmark. Second one is 3 months or 6 months treasury bill yield. Second benchmark which bank can choose is 3 month or 6 month treasury bill yield. Third one is any other benchmark interest rate, market interest rate, any other benchmark market interest rate published by the Financial Benchmark India Private Limited. So 3 options were given by RBI to fix their external benchmark, but majority of the banks have decided repo rate as their external benchmark. Okay. Then regarding the spread is, okay, once bank decides their external benchmark, the lending rate will be based on that external benchmark plus an additional spread. Spread will be the extra margin for the bank. So the spread, the banks are free to decide the spread over the external benchmark. So normally the lending rate will be, for example, the lending rate will be for repo rate plus a spread. So the spread will be 3%, 2.5% or 3.5%, whatever it is. So this spread, what will be the spread for the loan will be decided by the bank. Okay, bank are free to decide the spread. So that's another important factor. Third is regarding the reset of interest rate. The interest rate have to be reset regularly by the banks under this new external benchmark lending. So the interest rate under the external benchmark shall be reset at least once in 3 months. Okay. At least once in 3 months, this external benchmark rate have to be reset by the banks. So these points you keep in mind. Again, there is a high chance that UPSC can ask a question regarding external benchmark based lending, which is a very, very important current affair. Then there have been a revised guideline on compensation to whole-time director, chief executive officer, material risk takers and control function staff for all private sector banks. Okay. So with effective from 1st April 2020 onwards, for all private sector banks, whole-time director or chief executive officer or material risk taker or control function staff, their compensation will be based on, okay, so for private sector banks, for higher level executives, their compensation from 1st April 2020 onwards will be based on this new revised guideline. They are a substantial portion of compensation, that is at least 50% of the compensation given to the top executives should be variable. At least 50% of the compensation, that is, should be variable. It should be variable. It should not be fixed. It should be variable. Earlier, no such threshold was fixed. Okay. So out of their total compensation given to the top executive, at least 50% should be a variable component. It should vary based on certain parameters. Second is employee stock ownership plan or ESOP to be included as a, so under the component of variable pay, ESOP should be linked as a share linked instrument. You know, the ESOP is basically issued to the employees. Okay. So based on the share price of the company, that person will benefit. Okay. Earlier, this was not included under the this compensation. Okay. So the employee stock ownership plan to be included as a component of variable pay, as a component of variable pay. So that's very important. As a shared linked instrument, this will be included. Okay. Earlier, this employee stock option plan was not included, but in the revised guideline, this ESOP have been included. Then next is regarding variable pay. Variable pay is to be capped at 300% of the fixed pay. Variable pay is to be capped at 300% of the fixed pay. Earlier, this variable pay was capped at 70% of the fixed pay. But earlier it was not included. ESOPs or share linked instruments were not included. So another important point to note down is that variable pay is capped at 300% of the fixed pay. Then minimum 50% of the variable pay is to be via non-cash component. Okay. Among the variable pay, minimum 50% of the variable pay should be non-cash component like ESOP. Okay. Earlier no such proposition was there. And finally, that bank can go for a compulsory deferral mechanism. Okay. A deferral mechanism for variable pay. Regarding the fixed pay, they will get it on regular basis, but variable pay can be deferred. A deferral mechanism for variable pay, regardless of the quantum of variable pay. Regardless of what is the variable pay, there can be a mechanism which mandates a compulsory deferral mechanism. Earlier, it was mandated only beyond this deferral mechanism was only beyond a specified threshold. So here currently, without any threshold, the entire variable pay can be deferred by the bank to its top executive based on certain criteria. Okay. So there have been some changes regarding the compensation to their top executives, including CEOs. Okay. While calculating their compensation, especially the concept of variable pay have been clearly detailed. So there is a chance that from this portion also, what are the recent changes being introduced by RBI regarding the compensation for the top executive for all the private sector banks can be asked. So just have an idea what are those changes introduced by RBI. Since this is mentioned in the economic survey in this box, there's a chance that they can ask. But compared to the other topics, this you need to have an idea that these are the changes being announced by RBI regarding compensation to the top executives for the private sector banks.